Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be doing a brief stock analysis on McCormick and Company, ticker symbol MKC. So this company is definitely one that pretty much everyone probably uses in their day-to-day lives, and they have a ton of brands, different types of food brands, and that's really the first thing I want to showcase is just all the different brands they have, which they have it listed out on their website super nicely. A lot of these I've never even heard of, and I sort of like that because it seems like a lot of them are all around the world. So they have this jelly brand in Australia, which is cool. They have a honey brand. They have some other barbecue sauce brand, Clubhouse. Some more here. They have an herb brand, which seems pretty cool. That's probably something that's getting popular these days. They have obviously Frank's Red Hot and French's, the mustard brand, which are both super popular. They have these, Australian gourmet garden brand, which again is just cool to see that they have stuff all around the world. They have this brand, which is a Poland's leading brand of spices, it says, which I think that's pretty cool as well. And then they have some other brands here. They have basically a basmati rice brand, Kohinoor, I guess is how it's pronounced, which is pretty cool because, I think it's good that they have these brands in, different areas of the world. They have another barbecue sauce brand. And then McCormick, Australia and New Zealand, McCormick China, McCormick Consumer. So honestly, just a lot of brands here, and I know I've said that a lot, but I think it's just a good thing for them to have all that diversification, and they have a lot of different revenue sources from all those different brands. And we're also going to look at some actual revenues here from their Q3 earnings report, which was reported at the end of September, and it's for the 3 months ended August 31st, 2021. So for that quarter, they had net sales of around $1.5 billion, and that was up a little bit from 2020 of around $1.4 billion. And then the cost of goods obviously up a little bit as well, but their gross profit was very similar, around $599 million, which is up about $10 million from the previous year. And looking at their operating income, that was pretty much about the same, a little bit lower. And then their net income here was around $212 million for the quarter compared to $206 million last year for that quarter. So pretty much right in line, a little bit of an increase there. And looking over the first 3 quarters of the year as well, over here to the right, we can see net income for those quarters was $557 million, which is also up a little bit, around $11 million from $546 million in 2020. So just a little bit of growth there, but that's okay. It's good to see there is a little bit of growth, and earnings per share around 79 cents, which is up from about 77 cents last year. And they paid 34 cents of dividends per share in the third quarter of this year, and 31 cents in the third quarter of last year. So nice to see there was a little bit of an increase there as well. And we also are going to take a look at the balance sheet real quick. Current assets sitting around $2.2 billion, up a little bit from around $2.1 billion last year. So it's definitely good to see an increase. And then current liabilities, though, are around $3.1 billion, a little bit up from $3 billion last year. So that could be a little bit of a concern that they do have that current ratio that is, less than 1, more current liabilities than current assets. Because obviously that means they're going to have to pay out more within the next year than they have right now. So that's not the best thing to see, but it also isn't super unhealthy. I would definitely like to see them clean that up a little bit and hopefully put some more current assets under their belt, or at least reduce some of those liabilities as well. So long-term debt, they have about $3.9 billion, about $4 billion of debt, long-term debt, and we can see that about 3.8 of that was the same from last year. So they put on about $2 billion of debt, or sorry, $200 million of debt in the past year. Which is, not bad at all, but I would definitely like to see them reduce that a little bit as well. Debt is something I'm not really a fan of for companies in general. There's certain, there's definitely some companies that it's good for, and it's definitely good for them as a whole, but they just can't let that become too burdensome, I guess, as to repaying that. So Overall, total liabilities sitting around $8.5 billion compared to the total assets around $12.9 billion. So that is definitely looking pretty healthy there, and a nice increase in total assets of around $800 million since last year. So that's awesome to see as well. And also, I just want to take a look on Seeking Alpha here and look at some info about the dividend. So the current yield is around 1.6%, which is definitely very conservative for a dividend-paying stock. But their payout ratio is around 45%, which really tells us they have a lot of room to grow that dividend. And they have been growing that dividend for around 35 years, which does make them a dividend aristocrat, which is super awesome to see. And it gives us faith that they're going to continue increasing that dividend in the future, most likely. And actually, over the past 5 years, they've been increasing that dividend at a rate of 9.6%. Which is super awesome to see and something I'm excited about. And as I've been saying, looking for more companies like this in my portfolio, even if they have a bit lower of a starting yield, if they do have that good dividend growth, that is something I definitely want in my portfolio. And looking at the PE ratio is just our first method of valuation here. Right now it's sitting at 29.78. So you can see their earnings have been growing, pretty steadily over the past, 15 years. Obviously not the, quickest growth in earnings, but slow and steady wins the race for sure. And, obviously a food company, packaged foods, that's not going to be the fastest growing company out there at all. But their PE ratio has been growing as well, as I guess the stock price has been growing a little bit more quickly. I would definitely like to see their earnings grow a little bit more, and maybe just as a way to reduce that PE ratio. Obviously, the actual earnings are a little bit more important than the PE ratio, I would say, but as a method of valuation, we would want to see that PE ratio drop a little bit, I think, before we would want to invest. At least right now, it seems a little bit on the high side, at least compared to their historical, prices. And we can also compare it to the consumer staples or consumer defensive sector as a whole. And they kind of fit into this consumer packaged goods industry right here. So we can also compare it to that industry. So within this sector as a whole, their average PE ratio is around 27, and within the consumer packaged goods industry, their average is around 23. So McCormick is definitely a little bit overvalued compared to the sector in the industry, but they are a pretty high quality company, I would say. So sometimes that is merited, I guess, that they would be overvalued. But we can also look at a chart to look at the recent price action, I guess, and consider where it's at. So right now we're looking out to about the mid part of 2019 back here. Then obviously we had the COVID crash here, and then we saw some kind of steady price action over the past year or so, but it's been a bit decreasing. I would say their stock price year over year is probably negative or pretty much flat. So that's okay to see, and they've really been trading under these moving averages for a long time, just steadily moving down. And recently they have rebounded a little bit. You can see back here at the end, mid part of October, they were all the way down here around $78, and that RSI was way down here at 22, which is definitely a good sign of when you might want to buy. But right now they have rebounded fairly nicely since the mid part of October over the last month to around $84 a share. And I think for me, I would want to see them more closer to that $80 range. Ideally, around 75 would be even better. Right now they seem a little bit overvalued, but as a whole, they are a super great company, it seems like, and they have some nice dividend history, and they've been paying that dividend for a long time as well. So, if I was, forced to buy this stock at this price, I would really not be too upset about it. But I think for me and where I am in my portfolio, I'm not going to be adding right now just because I'm looking to get some great positions at really good prices. So for me, I'm just going to be waiting, and if I see McCormick around that $75 price range, I would definitely be interested in buying. So I would love to hear your guys' opinions on the stock. Not a lot of people, I would say, talk about this one. I actually have heard Alex from Blood Phantom 81 talk about it a few times, and that's sort of why I got interested in it or decided to take an additional look at it, because he's definitely mentioned it on his channel a few times. So that's it for this video. I just want to thank you guys for sticking around to the end, and I will see you in the next one.